HyperMeat.
What's going on, everybody? Super excited to be chatting with Chandler once again, the founder of Silhouette. Chandler, how's it going this morning?
Yeah,
Or
good this side of
afternoon?
the world. It's good this side of the world. Thanks for having me on again.
Yeah, super excited to be working with you guys too. Maybe for listeners who don't know you or aren't familiar with Silhouette, could you first give us a back of who you are before Silhouette?
Yeah, of course. So I'm Chandler, co-founder of Silhouette. I've been in the crypto space since about 2016. I worked for a centralized exchange, predominantly trying to expand the exchange into multiple emerging markets, Malaysia, Nigeria, South Africa. That's kind of where I cut my teeth in the early days. In about 2021, I jumped into the DeFi space, working at UMA Protocol and Across Protocol, and worked at a various couple bunches of DeFi platforms. Afterwards, kind of decided to jump into the founder space when I realized that in this world of crypto, privacy was going to be an important component, and dived very deeply into the ZK space. Kind of made my way around all the communities, and then Silhouette was born out of the idea of bringing some cryptographic technology into what we kind of know and love and call DeFi today.
HyperMeat is proud to be sponsored by Silhouette, the Shield exchange on Hyperliquid, protecting personal trade information. Awaken Tax, crypto taxes for crypto natives, and HyperFi, leverage lending on Hyperliquid. Remember, nothing you hear on this show is financial advice. You are responsible for your own decisions. Make sure you're doing your research. All right, buddies, let's get back to the show.
DeFi today.
Super dope, man. And you want to expand on that? What is Silhouette?
Yeah. So Silhouette started with this idea of kind of privacy trading on public venues. We built like a couple prototypes throughout the course of our history. We've been very much focused on enabling users to kind of have some sort of privacy tools in their favorite venues. And today we're kind of within the Hyperliquid ecosystem. There's many reasons as to why we're there. But at the end of the day, we want to build very meaningful pieces of technology that brings more liquidity on chain, more reasons for folks to trade. And our technology is really focused on enabling that sort of thing. But at the end of the day, you can kind of think of us as the shielded exchange on top of Hyperliquid.
Well, currently you guys are in your open beta, right? So users can deposit like Hype or USDC from Hypercore and make shielded or naked trades of Hype. How's that been going so far? Are there any stats you want to share or any cool feedback you've gotten from users?
Yeah. So one of the really interesting parts is that we've just had one market live, probably the most popular one, Hype USDC. We've had a ton of early users testing the product out, giving us some genuinely meaningful feedback on how they see the system go. And for kind of a couple folks that are looking at wanting to get large amounts of Hype, prop shops, funds, HIP3 deployers, that sort of caliber of users are very keen to actually ultimately use Silhouette to kind of do some of those trades. There's a little bit of extra work that we want to do on improving the performance on that side, mainly around the fees, which we'll get into in a second. But from our perspective, the beta is going pretty well. We've made some meaningful upgrades on the speed. We've made some meaningful upgrades on the security side. Things that users don't typically see, but for us is really, really fundamental to making sure that we have a trustless system and that users can feel like the system works basically in the way that they want in a continuous fashion.
Yeah, that's great that you guys are listening what your users are saying too. That's super important. So as far as your trading pairs, obviously you said you're doing Hype now. What assets or pairings are next in the roadmap?
Yeah. So Hype USDC for Hyperliquid is kind of an obvious starting off point. Get some users trying it out, getting some of that feedback. But there are so many more really cool assets in Hyperliquid that we're really excited to bring to Silhouette. So first one being kind of more than one stable coin. We're going to go live soon with USDH pairs, so Hype USDH and USDH USDC. basically enabling kind of the flow between the stablecoins and the various hype markets from that. This goes live next week. So we're actually very, very close to this being something that users can try. After that, very soon, a couple of days after that, we're going to be launching all the major markets, your BTC, your Sol, your ETH, the rest of the kind of majors in there. And then later after that, like a couple of the thematic styled themed kind of like releases for markets. So, your Hyperliquid native markets want to make sure all the ecosystem partners that have launched tokens, get some Silhouette love. We're also going to be kind of doing like, kind of close to our heart, privacy focused themes, so folks can trade privacy coins on Hyperliquid privately. Kind of a cool meme there. And then realistically, over the course of the next couple of weeks, we'll basically have full coverage of all asset markets on Hyperliquid.
Ooh, so we're on the precipice of full go for Silhouette for like a lot of stuff. That's
Yeah, hell
super
yeah.
exciting. While I was doing research, I was curious, so I kind of DM'd some of the whales that I kind of communicate with, asking them about you guys. How important was your research phase, like talking to whales or institutions before you started like building to solve problem with Silhouette?
Yeah, it was kind of really the driving force behind that. Like if we looked at what happened before, most of the privacy protocols were coming from like a cryptographer cypherpunk ethos viewpoint, and they built some of the most amazing pieces of tech that are out there. But if you spoke to kind of where the gaps were missing in terms of like how do market folks, like folks that do trading, folks that manage portfolios, institutions, whales, these folks that have like an innate like ability to read and understand markets, where that gap was sitting, that's kind of the gap we wanted to fill. So we spent a lot of time, I ran around the big kind of trading hubs of the world, New York, Singapore, London, getting into as many of these prop shops, market makers and funds, and really trying to like understand what they were trying to like, what are their objectives was. Now, the problem set was actually a lot wider than just, hey, like these public chains, we get front run, we get copy traded. If we're running a strategy that's quite profitable, people pick that up, and then immediately like that alpha erodes very, very quickly, a lot more quickly than it would on a centralized exchange. So the privacy component really tied into that feedback that I got initially. But then if you start thinking about like, okay, well, like why aren't you putting more funds on chain? If we can solve that problem, what are some of the other barriers? And then the kind of like list of feedback points really came down to, well, I do want to trade privately, but I also kind of got to make sure that my counterparty is somebody that I'm happy to trade with. There are a couple like non-negotiables. Like I can't trade if the liquidity on the other side is from an account that basically is on a sanctions list or part of the proceeds of crime. These are some of the answers that are a little bit unanswered in these open permissionless networks. And so we kind of took it on ourselves to try and work in that space to make it basically a bit more comfortable for some of these relatively large users to come on chain. And then I think the last one is economics. Folks really care, or like one of the biggest points I got in every conversation I had was that folks were fee sensitive. If we could make trading and access to these markets a lot more efficient, that would be a game changer for almost all of them. So fees and the prices on fees was actually a really, really important part. Now, if we look at like some of the problems that come out when you have these, kind of alluding to what I was saying before, if you have these public blockchains and my wallet gets kind of tracked and I realize, okay, this wallet's now being hunted or being copy traded, what's the thing that you normally do? Well, I then have to go and recycle that wallet. I have to go to a centralized exchange, create a brand new wallet, send funds over to that new wallet, and then start trading again. And the effects of that normally are that your volume and your kind of fee benefits that you accrue through these volume-based fee tiers, that naturally dissipates. And so you start from zero and you're basically paying the most amount of fees. So the cost of this ultimately, like recycling, it's not necessarily more an operational side, but it really gets tied to the user's fees that they pay at the end of the day. And so we thought of a relatively easy, low lift version of our technical stack that can basically mitigate a lot of those components for users.
You guys recently published an article outlining, Hyperliquid's fee tiers, where Silhouette kind of fits in, and then kind of where you see it going. So it seems like you guys are planning to offer the highest fee discount to your users.
Yeah, of course. So how our setup works is we have a trusted execution environment that takes signatures and instructions from users. So this is your let's call it your main account, your predominant account, and you can deposit into Silhouette. Those funds then get sent to an agent wallet that's managed by the trusted execution environment, and then can place trades from the user's instruction. So these are your standard normal Hyperliquid trades. Because these agent wallets are, you can kind of think of them as a series of wallets that pool funds on behalf of users. They can make trades on behalf of the user from their specific instructions. So at no point does Silhouette control those funds. There are escape mechanisms that we have. We try and make sure that the system is as uncentralized as possible. So there's no, like, whatever you want to do as a user is the only thing that trusted execution environment can do on your behalf. But these wallets, naturally, because they're like a collection of trades from a collection of users, accrue a lot of the value and fee volume that the users are submitting through that wallet. And so we can basically, like, okay, well, if this gets X amount of volume, we get to this X amount of fee discounts. Now that fee discount, because it's like the sum total of everyone's trades and not every user's individual trade, there is some benefit to scale there. So 10 traders can probably get to $7 billion of volume, but each individual trader might not be able to do that. So the more folks trade through Silhouette, the more value that accrues to all the users from that perspective. And then there is another component. So that's one side where we think like the aggregation mechanism works really well. On the other side, like, there's also staking discounts. So now Hyperliquid are quite nice because with just 10 hype, you can get 10% discount fees. With 100% hype, you can get, so with 100 hype, you can get 20. I can't remember the exact numbers on how that fee tier looks. But with 500,000 hype, you can get 40% discount on your trading fees. Now, it's quite hard for an individual to get 500,000 hype just to get that fee tier. So again, the aggregation mechanism here works to users' benefit. We can say like, okay, us as an entity, we can try and gather that hype, put it towards our wallets, and then pass on all those volume and staking fee tiers to users. So what this would mean for a user, which is what we kind of outlined at the article, is like, okay, your wallet's being tracked. You don't necessarily want people to see all your trades, but you also don't want to start from zero on your volume rebates. So instead, just keep that same account, simply use Silhouette, and you get the benefit of all the fee discounts that we've got on our side. In a permissionless way, trustless way, our system cannot kind of manage or maintain any sort of instruction that does not come from the user's wallet signatures. We also make sure that there are escape hatches so that any funds that are being managed under the Silhouette trusted execution environment isn't kind of done nefariously, and that there are escape hatches. And then the most important part is that we also don't have any payment for order flow mechanism there. So the instructions that you submit to us, like, are executed as per your instruction on Hyperliquid.
A lot to unpack there, but it's super exciting for users who are aware of this. That made me think of something though. When you trade shielded versus naked, does that have an effect on the fee tier? Like, are most of the volume, is it going to be the same, I guess, or is it different?
Yeah, it would be different. So the way that we've defined this is kind of like our own sort of definitions here. Naked, it's the standard Hyperliquid trading experience. Instructions are executed from your wallet. That's the main wallet. It'll show up on any sort of explorer as your wallet. And if you've used any sort of Hyperliquid front end, builder code front end, it's exactly that same experience. So for us, the naked experience is the vanilla experience, the one that folks are pretty used to. And there is no kind of value accrual mechanism because the volume's coming from your actual wallet. We're just the front end that's facilitating that through the Hyperliquid API. On the shielded side, that's where the benefits start accruing because we're kind of like aggregating your flow. So your wallet submits the instruction to us. We take that signature, we take the instructions. The trusted execution environment then submits that instructions to that agent wallet that it controls and submits the order on behalf of the user. And so that's where the aggregation comes in from. So fee benefits come in from the shielded side versus the naked side, which is the standard vanilla experience.
Okay, yeah, that makes sense. Maybe I could see where you'd go with this, but what would you say to someone, like the use case for this for like whales and institutions is pretty obvious. But for the maybe the smaller type traders, why should they consider trading shielded?
Yeah, fees are fees. Just because you're not trading $100 million a day or even $1 million a day does not mean that you're paying the same relative percentage in fees. So your $100 trade, your $1,000 trade, you're going to be paying those fees. The other side of it that I actually kind of think about is the the likelihood of a whale to get to lower fee tiers and accrue much more hype is a lot easier than the quote unquote shrimps. So for kind of folks that have smaller portfolios, are still excited to trade, don't want to be paying that amount of fees, can still get that benefit. And so if you think about it, like, your ability, if you're trading $1,000 a day, to get to a much higher fee tier is going to be harder. You just have to spend so much more time trading, and you're just going to eat all those fees. So if you have that $100 or that $1,000 and you want to make the trade, you want to buy some hype on spot, if you soon to be buy the other majors, that fee discount, you get the same fee discount that the whale would get. And so for us, it's actually not necessarily, while it's attractive to whales, it theoretically anyone could use it.
So this kind of made me think of another random question. People like to speculate on things. Since you guys are kind of coordinating this agent to bring all of these trades together, say something were to happen in regards to a hyperliquid airdrop, how would that look for your users? Because you have the data, would you just kind of, obviously you traded this much, so you'd get this percentage, or have you thought about that stuff?
Yeah, of course. So how the system, so we'd have to naturally build these on a case by case basis. We might tie into more than just the Hyperliquid airdrop. We might tie into some other protocols on Hyper EVM that might have airdrops later down the line. So from our perspective, it's actually quite easy for us to then build mechanisms to kind of like pass on those points to users. So while we can't promise what the mechanism looks like for each case because we don't know that information beforehand, teams typically don't say how their points are accrued. But what we can do is basically say, okay, like we're working with a protocol, we get those points, we know, okay, this amount of activity went to that protocol, so and we accrued X and Y amount of points. Okay, that those points come to us. We'll be able to then say, okay, as a user, sign into Silhouette. Here's a portal to go kind of retroactively figure out how much of those points. We can do the math to say like, okay, your pro rata rate of those points were this amount. And so we don't necessarily want to be extractive and kind of like gain points unnecessarily. Like for us, it's really around passing this value to the user. So on the fee side, we're doing the same thing, and so for the point side, we'll obviously do the same thing. But we'll manage that on a case by case basis as points come along.
Love it. Yep. Keeping that customer, that user at the center. Once again, awesome. Love it. Maybe it's just me because I'm weird and think about this stuff, but I'm sure there's other people too. So, like, how should traders or users of Silhouette think about taxes when it comes to shielded trading? Is there things we should know? Not financial advice, of course, just trying to understand the picture.
Yeah, your taxes are your taxes, and you should always make sure you do the right thing. So for each user, your trade history will be available to users specifically. So Beefs uses Silhouette today. He's placed 1,000 million trades through Silhouette. We know the trusted execution environment knows these instructions came from you, and so your trade history will be seen by you, and so you can go and kind of pull your trade history and submit that to any sort of tax accountant to be able to calculate much in the same way that you would do it on Hyperliquid. And so, the other way to think about it is deposits in and out of Silhouette have to come from the same account. So, you went in with $100,000. You came out with 2 Bitcoin. Great, you turned $100,000 into 2 Bitcoin. That trade history is something that you would probably want to submit to your tax account. So you could definitely do that. In terms of access to that data, we won't have the keys to manage that. Access is managed by the user's cryptographic private keys.
Ooh, nice. That gives me exactly what I needed to know. Recently, there was some news that broke that the U.S. Treasury acknowledged that mixers have legitimate privacy use cases on public blockchains. That's the statement that they put out. Silhouette isn't a mixer, though. It's like a obfuscation system. But when you see stuff like that, like, how does that make you think about future privacy features that you guys could maybe think about adding down the line?
Yeah, this is actually a question we get a lot. Like, why don't we become the mixing pool for these for Hyperliquid? And I think that there is an enormous amount of value behind it. I don't think the concept of wanting to keep your information to yourself is by any stretch of the imagination a weird thing to want. Like, I don't necessarily want the world to know what I do every single day, and it's my right to share that information. In these public blockchains, it's really hard, like, because almost everything is there for the world to see, and you have no choice in that matter. For us, we care about that choice, and so while I don't think what we're building is going to be for absolutely every single user, they might not see the need or the want for it, but there are a ton of users that do care about this sort of thing, and so if we look at like what the whole concept of mixing was, it's very simply a way for you to break your transaction history from one wallet to another. It works really well for the nefarious use case. It also works well for a ton of like legitimate use cases, as what you kind of mentioned. And we really care about that legitimate use case, and figuring out mechanisms to try and like stop the nefarious use cases and kind of only keep it in the legitimate space. It's a bit of a harder question to implement technically, and like what policies you have. There's a lot of there's no definitive answer on that one. But to me, this shows that privacy is okay, that folks who want it, aren't going to be victimized and criminalized. Mixes actually exist today in the world. I send my hype to centralized exchange, send it out to a new wallet. I've basically done a mixing service. The only problem is the government can have access to the centralized exchange like deposit records if they so choose. But so that ability is actually something that most folks have used today, and it's the most common version of what we see in mixing. It's not fully private, obviously, because there's a centralized entity behind it, but this uncontrollable smart contract version of how this a mixing can work, that's a little bit scarier. At the end of the day, I think that there are many reasons for why that's the case. But to me, overall, the sentiment here is bullish. It validates why we think privacy matters. It validates the fact that privacy is okay. People shouldn't feel bad that they don't want their information out there in the world. And I, at the end of the day, really, really want to make sure that we build systems that like cater towards those legitimate use cases, because that's the way that you bring more folks on chain.
Yeah, that really resonates with me too. Because, like, I mean, think about it. I'm using a Hypio right now to talk to you, so obviously I value my privacy.
Yeah.
As a person not building a protocol, it's easier for me to do that. But yeah, I totally get what you're saying. It makes a lot of sense. Before I ask your final thoughts here, Hyperliquid is all over the news right now. The world is kind of in a bad place overall, but right now the use case for Hyperliquid is just so strong, and that narrative is huge, and people are noticing. Do you think that this truly is a decoupling event for Hyperliquid in regards to like from Bitcoin and from other majors?
Yeah, completely. So crypto's really been just around like this programmable money component. And we built it on Ethereum. There's the L2s, there's Solana, there's like a whole bunch of crypto has been this like chain centric world that basically, we can build all these financial primitives. We did it for some tokenomics, pumponomics. We done some very silly things that we can quite happily admit to. But one thing that's been quite interesting is that the actual concept of like how do you build sustainable markets and how do you build them in a way that actually has genuine benefits over and above the crazy hype that's crypto. That for me, I think was a couple like really really important milestones. So if we look at what happened with Hyperliquid, they really nailed down the innovation that they kind of like perfected was the idea of perps. Now perps wasn't new. They just built it in a way that had a couple winning formulas behind it that ultimately led to its adoption. But that, if Hyperliquid, if we saw what they were in like 2024 and 2025, it's not the Hyperliquid that we see today. So there's been a series of really big, massive improvements and wins that enable that, specifically around the HIP3 markets and how we're tokenizing, how we're perpifying like the TradFi markets, and so folks can speculate. The one critique I saw, I didn't actually agree with it, but the one critique I saw was like, you got all these TradFi traders and you got all these crypto traders. What's the actual Venn diagram of traders that would actually care about these traditional markets in crypto environments? But that argument really, and the argument was that that's a really small subset. But that argument really misses the point that you've seen it on the timeline today, which is 24/7 markets. The idea that there can be a series of events that happen out in the real world that affect markets, but we don't trade it 24/7 because it was an older system it's a bit too costly to change, and there would be basically every engineer at every single bank and every single traditional exchange would have to rewrite their whole software stack. They've just kind of kept it at the standard 9 to 5, 5 days a week. And you can mimic 24/7 with going through the different markets across the globe, but there hasn't been one 24/7 market that's actually been available like that's truly global, that kind of unifies all these like disparate parts. So that for me, I think was a completely like massive unlock. And everyone that's within the Hyperliquid ecosystem like space takes us for granted. We're like, of course it's 24/7. Why wouldn't it be? And it's kind of silly for us to think about that. But if you think about how the TradFi folks think about it, they're like, oh, that's actually innovative. That's pretty cool. How do they do that? What system are they using? Like, how does it work in the background? Oh, they look at the tech and, oh, it's actually pretty useful. It's pretty good tech on the underneath, and it's actually growing in volume. And so I think those are sort of the data points that really have the shift within like the world, and all the credibility, all the news, all the kind of discussion around Hyperliquid, in the global scale is well deserved because of decisions that were made very early on, the principles by which they build, kind of the principles that Jeff and the team build Hyperliquid with is really easy for folks who put an enormous amount of trust in them. And you can kind of see it in just the data.
Yeah, I have the utmost amount of respect and trust for the Hyperliquid team. Maybe we don't understand why they do things at certain times, but then it ends up working out. So you made me think about something. HIP3 markets and the upcoming HIP4 upgrade with prediction markets and options. Does Silhouette play a role in those as well? Like, how does that work? Is it different?
Yeah, so if kind of very generally take a step back on how Silhouette works within Hyperliquid, we didn't build the underlying exchange and the underlying order book. We're basically a conduit to the instruments that Hyperliquid build out. This works with spot market. This works with perps market. We're going to be launching a soon to be coming out product around that side, and the same modality actually works for prediction markets. So the important part about why a prediction market, let's use that as an example, is kind of really important, is that while the net aggregate flow for the market to see, even in the presence of Silhouette on these markets, is in the price. So the most important part about the prediction markets is that everything's in the price. That price is your source of truth. Like what the market thinks is the probability. Who places the bets? How much did they place? How do they size? All of that becomes secondary bits of information that kind of exists in the world that folks can kind of speculate on. So if somebody prolific actually starts sizing up in a position, that's more information that kind of might sway the market, and somebody might want to keep that private. But as long as the end price is a true reflection of what's happening in the market, Silhouette can play a role in HIP4. And the same thing with options pricing as well. So for us, what we really care about is like that the market integrity stays the same, whereas like individuals' participation in those markets doesn't necessarily have to be disclosed.
I was curious on that. That's good to hear. It opens up tons more, opportunities there for people too. Before we go, is there anything else you want the Hyperliquid community to know about Silhouette? Anything coming super soon? I know you said like a week before we start getting more assets. You want to spill any alpha?
Yes. So next week, new markets are coming online. You can trade more assets outside the Hype USDC pair. We're very excited about that. We're also going to be adding our fee module. So the fee module for discounted fees on the volume is live and ready to go today. These accounts do need to start accruing some volume. So there'll be kind of a little bit of a cold start problem there, but we've got some solutions to solve that. And so once the volume tiers start accruing into the system, we'll be able to build out a mechanism that we can pass that on back to users. And then soon after that, which is kind of depending on how the stars align, we'll also be adding the staking discounts as well. So very, very quickly and very, very soon, Silhouette will be the cheapest venue in the world for you to buy spot assets. And this includes the centralized exchanges for all users.
There it is. There's the clip. Silhouette. Make sure you guys go check them out. Set those notifications on to stay up to date and everything they got cooking. Thanks a lot, Chandler. I really appreciate you coming on again.
Take care, sir. Thank you.